In this series, we're looking and we're answering the question, why do banks credit my account when I deposit money, and why do banks debit my account when I withdraw money? You need to understand that what we're learning is foundational to understanding double entry principles, to understanding bookkeeping and accountancy. Now, the previous session, we looked at double entry rules, and these rules are important and will help us to answer the question, why do banks credit my account when I deposit money, and why do they debit my account when I withdraw money? And when we looked at the double entry rules, we said that when an asset increases, we debit the account, and when an asset decreases, we credit the account. Now, it's very important that we understand this, because when we deposit money, cash, bank is an asset. And we gave a list of assets in session one. Assets are things like motor vehicles, premises, debtors, cash, bank, stock. These are things that these are resources that a business uses to trade. That's what you need in a business to be able to trade. So it's an asset. So cash and bank that we deposit in a bank account is an asset. And according to double entry rules, when an asset increases, we should debit. So what we're saying is, when we deposit money, actually that entry should be debited. And when we withdraw money, that entry should be credited. And but we're gonna dig deeper into this. Now, liability, on the other hand, is an obligation. For example, a loan or an overdraft, it's a liability. And when a liability increases, we credit the account. And when a liability decreases, we debit the account. We also looked at capital, and we looked at expenses. But the two main ones that we're looking at in this session are assets and liabilities. And what we want to know is, when banks credit our account, are they right? Because seemingly it's opposed to double entry rules. Okay, let's look at the T account. And we said that a T account is a ledger account, and it's T-shaped. And if you were preparing a T account for a bank account, well, the T account on the left-hand side is debit, on the right-hand side is credit. And on the debit side, that's money coming in, and on the credit side is money going out. Now, if you can see in our T account, when we deposit money, it should be debited, and when we withdraw money, it should be credited. And like I was saying to you, if you look at your bank statement, you will find that when you actually deposit money on the bank statement, it's actually credited. So what we're asking is, what the banks are doing, is that correct? Does it line up with the double entry principles? Okay, let's move on. So in this illustration, we're saying when we debit the account according to the banks, this is actually what banks do. When we deposit money, they credit our account. When we withdraw money, they debit our account. If you look at your bank statement, when you put money in, you'll find that money is shown on the credit side. When you withdraw money, it's actually shown on the debit side. Okay, so we're going to be answering that the question as we progress in the next few lessons, why banks credit our account when we deposit money, and why they debit our account when we withdraw money. Okay, fantastic. Thank you so much for joining me. Join me in the next class as we answer this critical question, why do banks credit our account when we deposit money? Okay, thank you. Bye.